Welcome to Leadership Reimagined, where game-changing conversations are reshaping the world of work. I'm Janice Ellig, CEO and founder of Ellig Group, executive search advisors and pioneers in redefining executive search through our unwavering commitment to helping organizations hire exceptional leaders and build inclusive environments. Today on Leadership Reimagined, we are exploring the aging crisis, leadership, responsibility, and the future of care. And I am delighted to welcome Tom McInerney, President, CEO, and Director of Genworth Financial, a company at the forefront of one of the most urgent and misunderstood challenges facing American families. Through its family of brands, including CareScout, Genworth, and Enact, the company is addressing the financial and emotional realities of aging in ways that will touch every household in this country at some point in time. So, Tom, I'm excited to have this conversation with you, and pleased you were able to make time to be with us.
Janice, great to be with you.
So, before we talk about long-term care, its implications, and your leadership as a CEO and board director, let's begin with how you got to where you are today. And most people don't step into the C-suite without somebody in their life having impacted them. And I've heard your father's work ethic and the belief that his belief that luck only matters when it meets preparation really impacted you. So talk to us a little bit about the impact of your early life growing up in New York and who influenced you, including your dad.
Thanks, Janice. I would say both parents were big influences, and just a little bit of my dad. So he graduated from high school in 1942. He was the high school basketball player of the year in the state of Connecticut. And so, if it was today, he'd go on to some university and hopefully get NIL payments and so on. But back then, he enlisted in the Navy. His first big assignment was D-Day. He was in the Navy at Omaha Beach and ended up doing 56 round trips from the south of England to Omaha Beach over the month or so after that. So, he had a very, very interesting background, but both of them, and I had 4 siblings, including 3 sisters, they really impressed on us what I would call the universal principles to be successful in life or any endeavor. And that was to work really hard, to shoot for excellence, always try to get A or A pluses, be dedicated. Excellence was a word they would keep using. So if you did well, but it wasn't quite excellent, they would say, hey, you can do better. But in a very encouraging way. And then probably most of all, they said in life, your integrity, the fact that people can trust you, trust what you say, trust that you'll do what you say, and then always trying to do what was right when you faced tough decisions. And finally, to help others, that it's not just about you and your success, but also to help others, help the people in organizations that you're with, and ultimately try to do all you can to help society. And I think in my time, both as an entry level middle manager and now a senior leader, I've always tried to do the right thing and have really tried to spend as much time I could in helping others. And I think I feel very good about how things have worked out so far.
It's interesting. 6 children, right, in the family?
5.
Oh, 5. Okay. And 3 sisters?
Yes.
Wow. So that's why you are so supportive of women. Thank you.
Yes. Yeah. Well, in that regard, I have 3 sisters, 3 daughters, and 6 grandchildren in April, 5 granddaughters and a grandson. So I'm surrounded by women, and they treat me very well. So I'm very, very partial to women.
You're a lucky man.
Yeah.
So talk to us a little bit about your career, because you did some lateral moves, right? And you went across industries, property and casualty, annuities, financial services overall, and global operation. So talk to us about that career path for you and how you did do some laterals and how that got you to where you are today.
Yeah. So I started at Aetna in 1978, and I'll give full credit to the senior leadership at Aetna. They had a process where the top leaders try to identify early employee potential. And I was lucky enough to be recognized in that. And once you were recognized by, in my case, the chief investment officer and the chief financial officer, and then eventually the the CEO and two CEOs, Jim Lynn and Ron Compton. But they found me when I was in my 30s, early 30s. They had a strategy with probably 5 to 10 people that they found sort of early 30s to really give them a variety of opportunities to work in all the functional areas. And then they had a very deliberate process of having you start with small businesses so that if you screwed up, you couldn't do any real damage, but then over time, increasing responsibility. So, when I started, I was in underwriting and risk management, and then I went over to sales and marketing. I mean, it doesn't happen very often, but, I think I enjoyed it because you really learned all aspects of the business. I spent some time in investments, worked as the CFO in a number of the businesses, and then twice I was asked to lead our corporate strategy and M&A activities. And there was a time in the late 80s and 1990s that Aetna did about 50 billion of acquisitions or divestitures, and I led all of that. And so that really gave me a very broad perspective. And then, at my time at Aetna, I was asked to run 4 or 5 businesses, different sizes, different areas. And as you said, across the spectrum, property casualty, life annuities, pensions, and health insurance. And between Aetna and then I ultimately, after Aetna, went with ING, but I had responsibility for international businesses in 40 countries. And you do learn when you're running a variety of businesses, but in 40 countries, you realize how very different the world is. I'm very pleased that I had the opportunity to have a very broad background. It's come in handy as CEO. There's not too much that my team can tell me that I haven't in some way over now this is my 48th year working. I've really experienced a broad array of activities and challenges and things that go right or wrong, regulatory environments, obviously in the U.S., but in many other countries. So I've tried to bring that same approach in my career. So one of the things I always try to do, and I've had some success, is find those middle level people that have quite a runway to go, but to focus on them and make sure working with HR, in our case, Melissa Agerman here at Genworth, to really elevate them and give them a lot of different opportunities and responsibilities.
Well, your leadership at Genworth, because I've talked to some of your leaders, including Melissa, do applaud what you have done for individuals in the company, basically some entry-level people who have risen to run entire departments. And so it sounds like what you experienced, you're now passing on. And how do you see this developing for the people there? Because they're loving this, but you're patient enough to make sure that they are given the support to succeed. How are you doing this?
That's right. I pride myself on being a judge of talent early on and tried to find people that I thought really could go all the way to the C-suite or CEO role and find them and then move them around. And so that was, again, as I said, that was me when I started at, I started at the very bottom of the company as a entry-level college trainee. I think my salary was $11,500, and I've done well over time. And I'm very proud of, and I'll give a couple examples, and I'm going to give all women examples because in addition to, I pride myself on being a good selector of talent within the organizations I've been with and finding people early in their career. So the first one I'll talk about is Kathy Murphy. Kathy and I worked together at Aetna. We first ran into each other in the late 1980s. She was doing state government relations. And so we had a number of issues in our health insurance business trying to manage that when, like today, when medical cost trends were going up significantly. And so she and I went out to visit all of these regulators. And I said, wow, this person, Kathy, could go all the way. And so when I changed from the health division to the global financial service division, again, she was a mid-level lawyer. I said, so Kathy, what is your ambition? If we were still with Aetna at the time, if you could paint the story of your future, what would it be? She said, well, I'd like to be general counsel at Aetna. And I said, that's interesting because I see you as a much broader person than just a lawyer. Nothing wrong with being a lawyer.
Yeah.
And if you want to be Aetna's general counsel, I'll work as hard as I can with you to get you there. But I think you should think about, do you want to be, at the end of your career, general counsel, or do you want to be CEO? So she went away for like a week or so and came back and said, well, I'd really like to, if you think I can do it, to be given a shot. And so we ended up moving over and, a small business at first, and then very quickly to a large business. Then our whole division was sold to ING. And she had the opportunity to run the biggest part of the United States business for ING. ING was in big Dutch #1 financial service company in the Netherlands and top 5 in Europe. And I remember debating with all my Dutch colleagues on the executive board. They said, well, a lawyer who's never run a business and a woman, again, this is in around 2000. So Europe was well behind in terms of, they're doing better now in women in roles. And they said, why would you give her not only the biggest job in the US, but the biggest job running a business, P&L, and all of ING? I said, well, I think she can do it. And, I'm not going anywhere. I'll be around. I was then based in Amsterdam, but I'll be around. And of course, the rest is history. She took the job. She did an amazing job. And then ultimately, when Ned Johnson retired or stepped away from Fidelity, Abby Johnson picked Kathy off, and Kathy was, I think, the #2 person at Fidelity,
right,
and did outstanding. Another person, I won't go into his longest story, Catherine Smith, like Kathy Murphy, was really good advising businesses and leaders within Aetna. She was in the strategic planning, M&A area, which I spent quite a bit of time then. And again, with Catherine, I said, well, do you want to just be, a planner and helping businesses, or do you want to run a business? And so she wanted to do that. So eventually she was on the same path as Kathy, and ended up, when she retired from Aetna, she was running one of Aetna's bigger businesses. And then here at Genworth, Jamala Arlan. Jamala runs our closed block, which is our largest business in terms of employees and challenges and so on. It's the legacy long-term care business. But she was a middle-level actuary, and I thought she was brilliant. And so moved her up to oversee all of the closed blocks from an actuarial perspective. And now she's the CEO. And then Jennifer Jones was our best project manager. And so somewhere 4 or 5 years in, it seemed like every hard project that anybody had, they always gave it to Jennifer. And so today, Jennifer is now in the C-suite. She's the chief operations officer. So those are 4 examples of fairly middle level people that normally would have, I think, been successful, but likely not in C-suite level jobs. And they didn't even have on their own personal radar screen that they could be that, and had a more narrow view of what career success will be. And I like those 4. They're women, but they're also, just probably my best track record of pulling people up. So to me, it was very, very important. And I think one of the best things I could do for our company was to identify the best talent wherever they were at whatever level and move them. They had to perform. And just like me, when you're given those opportunities, you have to perform and deliver, because if you don't, then it won't work out. But in those cases, it was, I have a good track record, at least with the 4 of them and more, in terms of being
giving people access to opportunities. So you're changing people's lives as employees within companies, and you're changing people's lives at Genworth. You stepped into this role in 2013, and long-term care was really not your specialty, although you did work under 3 U.S. presidents on entitlement commissions, correct?
Yes.
So what point did you realize that this issue was more than a business challenge, but a societal challenge?
I came to Genworth on January 1st, 2013. And by July, I realized that I had never, as you said, I've never been associated with long-term care insurance. But I had a lot of experience in health insurance. Mm-hmm. And I do think long-term care insurance has a lot of similarities with health insurance. And so 6 months in, so at the July board meeting, that was our strategy meeting with the board, I had said, well, I have good news and bad news. The bad news is tens of billions of dollars short of what we ultimately need to collect in premiums over the next 40 or 50 years to pay all the claims. And I also said that I am very surprised that Genworth, the leader in long-term care, but none of our top competitors, with John Hancock, Transamerica, Unum, CNA, PruMat, no one had ever created a PPO network in health insurance. And so I had a lot of background in that from my days at Aetna. We had developed PPOs and HMOs in 40 years before I came to Genworth. So I said to the board, whatever the people actually provide the care, whether home care providers, assisted living communities, or nursing homes, we pay, in every long-term care company, we pay whatever they charge. That's the way it was in health insurance in the 50s and 60s. It was called indemnity, which is a hospital or a doctor sent a bill in, the insurance company paid it, didn't ever try to negotiate. And so I had said, to me, it's crazy that we pay whatever invoices we get. And these were, very big policies with a lot of benefits. We ought to negotiate, given how many policyholders we have, to get better deals with providers, because our customer base is very valuable. And I said, and we and everyone in the industry in 2013, a lot had gotten out by the time I came. And subsequently, most of the 130 long-term care insurers have gotten out. There's about 10 left. And so the board at the time said, well, when you fix the problem of the legacy book, we'll let you invest in some of these new businesses. So it's pretty, that was 6 months in. And we have now Jamala Arland, who runs our closed block, and her team have gotten $35 billion net present value economic benefit in managing the legacy book. We have $100 billion of claims that we project will pay over the next 40 years. And the $35 billion is not quite enough. We need more like $40 billion. But we've really, and what we're really doing there is making sure that we can pay all the claims of our 1 million policyholders. And I was not able to convince the board to do the PPO or to do new insurance funding products we now call here LTC 2.0. And so we had bought this company, CareScout, in 2008, and it was doing assessments on behalf of our LTC insurance business. But I said, that's a better brand, CareScout, than Genworth for the long-term care space. So let's go forward with that brand, but go back to July of 2013. And the same strategy that I had presented to the board, that they said, well, let's put that on hold until you get significant progress on fixing the legacy book. But in 2023, and by then we had a lot of new members of the board, they gave us the go-ahead to create PPO. So we call it the CareScout Quality Network. We have 1,000 home care providers and 2,000 plus assisted living communities. And given our million policyholders, we're saying we will refer them to you. We want to credential you to make sure you meet our quality standards. So we've done that. And given that we have 1 million long-term care policies, still the largest book of business in the industry, they have a lot of benefits. So they'll be very good patients for you to take care of, but we expect discounts. So we've been able to negotiate 20% discounts. And that's all about trying to bend the cost curve for long-term care. It's like in health insurance, it's very hard to do that, but I think we'll be successful. And then the second part of CareScout is to launch new long-term care policies that are much, much better in terms of how they're structured, much more reasonable assumptions.
The statistics are really alarming when you think 70% of Americans turning 65 will need some form of long-term care, where home care now averages over $77,000 a year, assisted living is $70,000, and private nursing home and other, assisted living are over $125,000. This is an enormous cost. None of this is covered by Medicare, right?
Correct.
Yeah. So, and people don't realize this until you're faced with it. And all of a sudden, there's a huge outlay which can bankrupt a family. So how do families prepare for this, Tom? And what is CareScout specifically doing along with Genworth?
Yeah, so our focus is on helping the 70 million baby boomers who are 60 to 80 in 2026. So the oldest were born in 1946, so they're now turning 80, and the youngest were born in 1964, so they're 62. And for the U.S., and this is similar in Japan and China and Europe, that every day in 2026 until 2044, 9 to 10,000 baby boomers will turn 80 every day for 18 years. And so the baby boomers are not well prepared. Hopefully, Genworth and CareScout and hopefully the federal and state governments can help the children and the grandchildren of the baby boomers. Because the baby boomers are 62 to 80, there's not a lot we can do other than to try to reduce the cost. And so again, coming back to CareScout services, for there 95% of the 70 million baby boomers did not buy private long-term care insurance. So, the top 20% or so can self-fund. They have enough assets to cover that. But for most baby boomers, the median savings for baby boomers is $200,000 to $250,000. And if you retire at 65, you should expect to live on average 20 or 25 years. And so that 200 to 250,000, when you look at having that cover you, just normal retirement is difficult. And then and you gave the numbers earlier, Janice, you're absolutely right that in-home care is about $77,000 a year, and in a nursing home it's $125,000. In a lot of the larger cities where people tend to live, it's more like $150,000. So we're trying to reduce the cost through our CareScout Quality Network. For the children and grandchildren, we're going to help them assess the needs of their parents and grandparents, come up with a care plan, work with them to manage the costs. And, given what baby boomers have done in preparing themselves for retirement, which is not a very good job on average, the children and grandchildren are going to have to help support them. Medicare, and you mentioned, it does not cover long-term care, never has. That is a misperception on the part of most people. They think Medicare, I reach 65 and every health issue is covered by Medicare. And that's true for medical insurance when you have, medical conditions where a doctor or surgeon can fix it. But when it comes to custodial care, so as you get into your 80s, people have trouble with what we call activities of daily living, ADLs, which are getting out of bed, being able to cook and plan meals, be mobile, be able to go to the bathroom, those kinds of things. That is not covered because it's not a medical condition. But we all take for granted that we'll always be able to do those normal activities of daily living. But when people starting at around 80, but 80 to 85 is the peak years where people need help. And so, there's a lot of work that needs to be done. The private sector can, including CareScout and Genworth, can do a lot. I think state and federal governments are really going to have to help figure it out. Medicaid is the payer of last resort.
Right.
So if you're one of those average Americans with $200,000 to $250,000 in savings, that and Social Security pays $3,000 on average a month. So to live on that, but because these diseases are so expensive, and we have Alzheimer's cases where people are needing care for 8 to 10 years. So a lot of those baby boomers that don't have private long-term care insurance, those assets they'll use those assets to pay for care and ultimately go on Medicaid. And so again, I think that what we're trying to do is work with state governments, local governments, federal government, and trying to help the baby boomers who are not prepared. But a big part of our focus, particularly for CareScout insurance and the funding products, is I think the children and grandchildren of baby boomers, when they see these costs of $77,000 a year for home care, $125,000 for nursing home care, The inflation rate is 3 to 5%. So that's also going to be a challenge. And that 95% of their parents and grandparents don't have long-term care insurance. They're going to see how important it is. So we do hope where we can really help is the children and the grandchildren of baby boomers, as they see their baby boomer parents or grandparents need help, that they'll better prepare themselves by saving more and in some cases buying private long-term care insurance. There are some good signs that are showing some of the younger generations are saving more. And I think as their baby boomer relatives transition through the aging process, in order, we're one of the things you said at the beginning, we're trying to allow older Americans, as they age in their families, make sure that their parents and grandparents can live through their retirement years with dignity, with confidence that they can manage these challenges. I think for the baby boomers, it's going to be tough, but hopefully the next generations will be better prepared than the baby boomers. And then the government's going to have to figure out how to take care of the baby boomers.
So the sweeping reforms, though, to help the baby boomers, that's passed, right? There's really nothing that can be done. I mean, we're into our issues of care at home or elsewhere where it has to be covered by ourselves, our savings, or our children. But where are government leaders and policymakers going to address this for the children and grandchildren of the baby boomers?
So I would say, Janice, it's very sad that government leaders for the last 20 or 30 years have not wanted to do the hard things to fix the entitlement programs. And even today in the 2024 election, we had both Vice President Harris and President Trump both saying that Social Security and Medicare are untouchable. That is so wrong. And I'm very, very disappointed with what's going on in Washington and state capitals for the last 30 years. You had mentioned that I worked with 3 presidents on entitlement reforms. And the first one was in 1991. It was actually the Bipartisan Policy Center working with Congress and then President George H.W. Bush on looking at entitlement reform and what can be done. And I was asked to be on that commission. There were about 20 from the private sector, and I think there were 4 senators and 4 House members from each party. And at the end of 1991, and then going into the Clinton administration, that whole group, what we came up with would have really helped fix these programs. And the most important thing that I now tell the current administration and members of Congress is in 1991, the baby boomers were 27 to 45 years old. Mm-hmm. That's an 18-year span. And if the reforms that we had recommended were implemented in 1991, which were raise the retirement age, index it towards mortality improvement, means tests, so the top 15%, even though these were programs for them to pay into and then collect when they're retired. But we said for the top 15% of Americans, they really should not receive Social Security because they don't really need it. And it's only $3,000 to $4,000 a year. And let's leave that for the rest of Americans that we know won't be saving enough. And then we did say, for example, in Social Security, I think most people know that you pay payroll tax up to a certain amount. It's like $190,000, I think, today, versus your whole income. And the reason that it was capped, people often say, well, why was it capped? Is because it was a strict retirement formula. So to the extent that you taxed all income, then high income earners would receive a lot under Social Security. But we said, we should cap the maximum amount you can receive, consistent with where it is today, but still tax all income all the way up. All those things that they had been implemented would have worked. And so I was on the Bush and the Clinton. And I did a little bit of work with George W. Bush, and then Obama had Erskine Bowles and Alan Simpson. And Alan Simpson was in our 1991. He was in the House then group. Same recommendations in 2009. And just like all the commissions, nothing really was done. And now the problem is the baby boomers are 62 to 80. When they were in 1991, when they were 27 to 45, they had a lot of time to pay into the system to increase the amounts that were funded. We didn't do that. Now they're 62 to 80, so they're taking out. So that's really, there's not a lot we can do. The government has to figure out ultimately some way to benefit boomers. But there's really not time left given their age group. But the children and the grandchildren, I hope that those recommendations that we made in 1991 that were the same for all those commissions through 2009, that was the last one under President Obama, that those recommendations, which are pretty universal, that's what you have to do, that the federal and state governments can do that for the children and grandchildren of baby boomers. So at least they won't have the same challenges that the baby boomers are going to have.
So we missed the boat 35 years ago.
Yeah, we did. The funny thing is, I've said this to a few people. So the 20 of us from the private sector, people, Ned Johnson, who's the top guy at Fidelity, was on that. A number of Fortune 10 manufacturing companies, Boeing and others, were on that. But we were asked to, I think it was 92, 93. So it's right between President Bush and Clinton. They were, that was the changeover. We were asked to do it was like a 15-slide presentation at Chambers of Commerce, Rotary clubs. And the last slide was, this is again, 92, 93. If nothing is done to change it and it remains the same as these baby boomers age, and we get to 2032, so 2 elections from now, we said this in 1992. So 40 years before 2032, we said if nothing is done, and nothing has been done, that the presidents from 2032 on will be one-term presidents, because they'll come in with, how do we solve the problem of these baby boomers needing all this care? And it's so difficult because we've waited so long, and they're now in the years where they're having all these regular health expenses and long-term care expenses, that we predict there'll be one-term presidents until about 2050, when all the baby boomers will have moved on. And I think that's likely to be true, because I don't want to pick on, and I won't name names, but I have good relationships with probably 20 senators on each side and a lot of House members. And they are now aware of these issues, but as both campaigns in 2024 said, well, we're not going to do anything to touch those because, it's the third rail and so on. But it's really sad, because you would have expected that politicians over the last 30 or 40 years would have stepped up and fixed what are these real significant problems for the country. And they didn't do it.
It's sort of, I've always said, business has to be working to make change and work with Congress. Here you were so many years ago, 35, as experts in these areas, and they fell on deaf ears. Nobody wanted to bite the bullet. Nobody wanted, attack what's called a sacred cow. But I've often looked at it and I said, why does Warren Buffett and others in that, why are they getting Social Security?
Exactly.
Right? And yet we are faced with the huge aging and health issues in this country. This is just,
Yeah, and the math is overwhelming. I think most people don't understand what $1 trillion is worth. It's worth a lot. But the current cumulative deficit is $38 trillion. We're adding $2 trillion a year. And so I see on the current track, and while I make this, and I'm in the conference board and the Committee on Economic Development, trustee of those, and I know you're involved with that, Janice. We have been saying these things for a long time. So it's 38 trillion, growing at 2 trillion a year. We're going to, in 20 years, probably have debt to GDP at 200%, which is that is where economies fall apart. And then the Social Security, Medicare, Medicaid, and I'll add Veterans Administration to that. Those are pay-as-you-go systems, and the current actuarial cost on a net present value of what's owed to, and I think this is people who are living today, it's about 100 trillion. So on top of the 38 trillion deficit growing at $2 trillion a year. There's $100 trillion that we owe. And there should have been trust funds, but the Congress in 1976 and the Carter administration allowed themselves to go into what was then the surplus as the baby boomers were still paying in. They rated those trust funds for the general budget. So that $100 trillion that we owe in those 4 entitlement programs, that's pay-as-you-go system. And the boomers are retired. The youngest is 62. So the cost of that $100 trillion plus the regular deficit, that all falls to our children and grandchildren. And I have been very, very disappointed that that's been pretty well known for decades, but still Congress is kicking the can down the road. So I guess what I would say, coming back to me and my legacy, in addition to Hope having fixed Genworth, launched CareScout for the future, for the children and grandchildren of the baby boomers. But I also hope that we can help as much as we can with government for the baby boomers. It's going to be a big challenge to manage all of that. But so I hope my legacy is that he came in, he found Genworth in pretty bad shape, and he fixed that with his team. I give all the credit to the team. But he also spent the time he could outside of the day job with the conference board, the Committee on Economic Development. I've been involved with the Bipartisan Policy Center. One of our board members, Ken Conrad, is on the Peterson group. Pete Peterson had set up a trust to help with fiscal policy. And Ken Conrad, senator from North Dakota, who's on our board, is involved with that, and I'm involved with that. So a lot of really smart people are aware of the problem. It's really hard. Politicians are great at guaranteeing more and more benefits to Americans, and it continues. But what they don't do well at all is pay for the promises that they're making. And it's going to be, in the next 20 or 30 years, it's going to be very challenging for the U.S. Japan and China and Europe are in even worse shape than we are. But all of us trying to manage our equivalent of the baby boomers as best we can, knowing that, it's late in the game because of their age. But hopefully we will not make the same mistake for the children and the grandchildren of the baby boomers. So I hope my legacy is that he turned Genworth around, but more importantly, he was one of the business voices that made an impact, hopefully at least at some point, and policymakers listened, and they made at least not for the baby boomers because it's too late, but for the next generations.
Well, Tom, I think you're going to have to speak louder with your group of experts in Washington because
for sure.
Because it is so disheartening that there's been nobody's taken responsibility for this. It's a dereliction of duties and responsibilities, and the children, our nation will suffer in many ways. You're really making a difference for people in the world. I also did want to mention you do serve as vice chair of United Way Worldwide. You're part of the U.S. Ski and Snowboard Foundation Board. I understand you skied, right?
Yes.
You learned.
Yeah, I raced all my life and was on the top ski team in New York State, and then I raced in college. So yeah, I'm still an avid skier.
So just before we close here, there's some Tomisms about leadership. Give us some of the leadership lessons that you've learned and you try and practice, and you would say those in government and those in business would do well to practice more of.
So I think leadership, if I said what is it closest to that sort of the average person understands, is the head coach of a team. So our responsibility as leaders is to set the vision, the high level strategy. What's the mission and purpose of the organization, whether it's, Genworth or CareScout or United Way or the U.S. Ski Team? What's the mission of the organization? And then how do you surround yourself with a very strong team? As a lot of the best coaches say when they win the national championship, well, it wasn't me, it was the team. And I think that's absolutely true. But, the head coach gets a lot of credit. They set the vision and sort of the mission and the strategy, but then it's implemented by the assistant coaches. So let's call them the C-suite of companies, and then the employees who actually deliver. I also think leaders have to be optimistic, no matter how big the problems, and we've just talked about the huge problems, fiscal problems that the U.S. faces. You got to just roll up the sleeves and attack those problems very proactively. Things don't go as planned. Things always change. The companies and the competition changes. The world changes, and we're seeing that today. And so CEOs also have to be very resilient, know that things will go wrong, plans will go awry, technology or something, pandemics from left field come and totally disrupt what you're doing. So you have to be resilient. You have to be able to pick yourself back up and redirect and keep the morale and the confidence of your team, so that no matter what you face, internal challenges, external challenges, things that you have no control over, you just deal with them and move forward and move the organization forward. So, to me, it's George H.W. Bush, and I remember being on his talent commission. Every once in a while, I listen to him. He'd say, I don't have the vision thing, but I think for leadership, the vision thing is, in the end, the most important. And then rally the team, whatever team it is, around what is the mission, what is the organization's purpose, what are you trying to accomplish, and have everybody believe in that mission and believe no matter what you face that you can fix things, make things better. You can't always hit your robust objectives all the time just because of what happens, but you do the best you can. You perform with excellence, with passion, with energy. And usually if you do those things, it turns out okay.
Tom, I've talked to many people in your company, and they all feel the mission. They all know that they are working to change, doing good and making good at the same time. And the legacy that you have here is far more than a balance sheet, although that's important. But you and your team truly are helping families prepare, helping caregivers feel supported, and helping people age with dignity. And your people feel that and do it every day. I'm impressed by what I hear from your team. So congratulations on doing what a lot of CEOs are not able to do. They say they have a mission, but it doesn't really, filter down through the entire organization. Yours does.
Yeah, I'm very proud of that, Janice. And it's a team effort. The whole team, I believe at Genworth and CareScout, the whole team believes passionately in the mission, the purpose. We're helping all Americans and their families, in the aging journey, to lead in their retirement years, to have individuals and families have a higher quality of life, have confidence that they can live well in retirement years. And I think we're dedicated to that. And I think all of our employees know that we really make a difference in the lives of older Americans and their families.
Tom McInerney, you've given us a lot to think about today, and to face problems that are very real and to do something about it. And I think all of us can do that also by writing to our congressman. So thank you for opening our eyes to what really are some major problems. And thank you and to the Genworth team for all you're doing to address one of the most important challenges facing our country. And that is changing the paradigm so people can age with dignity. Thank you so very much.
And Janice, and thank you for these podcasts and focusing on these big issues around leadership, how you elevate a diverse workforce into leader positions. I think that, and I know you distribute this to a large group of leaders. And so we appreciate the wisdom that you have in getting leaders together with you so we can do these podcasts and hopefully educate a broader universe of leaders around the U.S. and all these challenges that we collectively face.
Well, Tom, I just might vote you in for one of the offices in D.C. Could be the presidency. I'm not sure because somebody's got to do something.
I'm not a politician because I can't deal with the team that says, hey, it's a big problem, but not my problem.
Yeah, no, I know. Tom McInerney, thank you so much for joining us today. Really insightful. And to our audience, thank you for tuning in to another game-changing conversation on Leadership Reimagined. You can find me on LinkedIn or visit us at elliggroup.com. Thank you all for joining us today.